Hi, everyone. Enjoy the whole conference day. Yeah, and we also have a great panelist here, and I think maybe some of you know each other well. But first, please give us a quick intro of yourself, your project, or your role, something.
Hello, everybody. I'm from Qiming Venture Partners. We are one of the leading venture firm in Asia, and we have been investing in the space since 2019. And also, it's great to be here at the conference for the second time. We do think it's a great initiative. So it's exciting to be here, learn about all the new researchers, and also have the time to chat with everybody here, all the friends here today.
Thank you. Thanks for invitation, Audrey. It's great to be here. I'm Emma. I'm the founding partner of LongHash Ventures. We are a crypto native VC fund based out of Singapore, have been in the space for the last 5 years, more than 100 portfolio companies, including some of the household names like Polkadot, Manta, Astar, and whatnot. So happy to contribute to the panel.
I'm Tina from Flashbots. I was a co-founder and I'm a steward of the Flashbots collective. We defined the MEV space and been doing infra R&D within the Ethereum ecosystem.
Hey everybody, I'm Jim Parillo, managing partner at Figment Capital. We are an early stage venture fund that focuses on blockchain infrastructure, primarily scalability, interoperability, ZK technology, privacy, and sometimes user experience. We spun out of a company called Figment that's one of the largest block producers in proof of stake infrastructure. And we've taken a lot of those lessons and we've applied them to the teams and the organizations and the networks that we invest in.
All right. Hi, everyone. My name is Kun Peng, founder of the Stanford Blockchain Accelerator program. So basically at the cross-section of industry and academia. Also teach at Stanford on Web3 entrepreneurship. So trying to help some of the best founders from the Stanford blockchain ecosystem, being researchers, students, professors, etc. In the past, there's some interesting projects that came out of the ecosystem, like Caldera's, Nexus, Modules Labs, Zero Gravity, Succinct Labs, among others. So happy to be here and contribute to the panel.
Okay, great. It's a great panel, right? Okay, let's quick with the first question. And during our last conference, which happened in the last November, we're still in the deep bear market, but things changed during the last 6 months. And in your point of view, and what sectors that kick off this change? And also, do you think we are in the which situation of this circle? It will keep us through the next, maybe next year or still next 2 years?
Okay, so I'll start. So really quick, I think from a research and development point of view, it often decouples with the market cycle, right? So what I can see from the R&D side is like they are always progressing all aspects, right? For example, the major upgrade on the Ethereum side, so things are keep iterating and developing. So that's awesome. On the market side, it did come back quite a lot. I guess mainly due to the Bitcoin spot ETF approval and many other development. But I guess from my point of view, I don't in the industry or in the sector, I don't see like super major development that excites everybody. So for me, I do think the market or the sector right now, it's a little bit boring per se to me. And I guess I'm really looking forward to more developers come into the field and make new stuff. And hopefully we can see something exciting in this cycle.
Totally agree with Yi. I think first question is which stage are we in the market? Typically, I would like to divide it into bear market, early bull, late bull, and distribution phase. I feel we're probably somewhere between early bull and peak bull because every time when crypto price reaches all-time high, it will also go into a more euphoria phase, right, which is more expensive. And now we've just kind of hit all-time high for Bitcoin and not even for ETH and some of the altcoins. So I do think there's still some way to go. Coming back to the drivers, I think for this cycle, there are certainly two tailwind factor, right? One factor Yi has mentioned, which is the BTC approval, ETF approval, which kind of bring BTC and crypto as a one institutional assets, right? So we can expect a lot of institutional funds starts to allocate to this sector. And the second tailwind, I think it's a liquidity cycle. Every time the bull market of crypto coincides with the liquidity cycle, which means, you know, rate cuts in macro environment, that's gonna bring more liquidity into risky assets. And right now we haven't experienced the rate cut yet, but there's a lot of anticipation in terms of rate cut over the next 12 months or so. So I think those are definitely positive tailwind for the industry.
I guess as a token startup person, working in the crypto or infra R&D side, we are absolutely untouched by the market condition, to the extent that I was looking at institution money going into, potentially DeFi. Unfortunately, there is a big regulatory hurdle. Plus that CeFi yields is actually drawing all of the institutional trading volume to CeFi, and they don't actually deploy more capital in DeFi. And at the same time, for infra, I think that we're looking for traction specifically with all of the Ethereum ecosystem. We haven't found it in terms of like the L2 usage, etc. But we're hopeful. So hopefully after the frothy market is over, we can have something left for years to come to build on.
Yeah, I'll take a different approach. So I guess what I'll say is that I think what we're seeing right now is a bit of a focus on the user for the first time in a really long time. And what we're seeing as a benefit of that is that teams and that are built towards empowering users rather than other aspects of maybe the tech stack. And maybe we're at a point right now where we have enough progress where we can actually think about the user. But a lot of where we're seeing the most transaction throughput and where we're seeing a lot of the most interest up until fairly recently has been Solana and high throughput blockchains. People are a little bit tired of spending too much. People are a little bit too tired of not having transactions go through. And I think we're starting to see user preferences move towards maybe a Gen 2 type transaction supply network, which would be L2s on Ethereum, Solana, and maybe some of these other all L1s as well. It's interesting to see. And we're seeing certain innovations on the L2 side as well that are going to start to, I think, prioritize cost and like low latency over maybe some decentralization. There's going to be trade-offs, and we're going to have to see like who kind of wins out. Monad recently raised. It seems like parallel execution is something that people are really interested in, and or at least investors are. And we'll see whether like users get a benefit in some type of user experience as a result of that.
Yeah, I agree with all the points made by the previous panelists, and a few things I want to add on is I feel like it's a spectrum. Like people are more sitting on the research side of things. They're less sensitive to the market condition because they're still doing research, right? They would have still done the research on the ZK space, infra space, on cryptography space. It would even like Bitcoin price was like 10K or 1K, right? So that kind of research continued, and the interest still there. And then with market condition, what happened, since I've seen several cycles in the Stanford blockchain ecosystem, is higher price can actually attract two things like user adoption and also like talents. So more specifically on my end is talent. So like usually during the bull market, we have a massive inflow of students, and they are able to raise decent amount of VC money, and then they are building on top. So I think this kind of wealth effect brought by the market condition bull market is always good to attract top talents, and they can continuously build and make the ecosystem more mature. So it's a very interesting phenomenon that's happening only in crypto. But in other industry or tech industry, you're really attracting people by merit rather than by the financial aspect of the technology. So I think that actually helped to accelerate the maturity and the development of the industry by massive user adoption and talent attraction.
Oh, great. Just a quick question to James. You're talking about the Solana, yeah. And actually, maybe we call it meme spring. There are lots of meme happening in the Solana ecosystem. Also, some letters just like the base. What's your point of view? What's your view about that? Yeah.
So I'm a little older, and so I'm more of like on the investor side than on the trader side. So it's a little foreign to me, the meme coin trading. What I will say is that it is to like the point of wealth effects. There have been a number of airdrops in the Solana ecosystem recently for projects that have launched and have been servicing the Solana ecosystem for multiple years. Jito, Jupiter, both great teams, great projects, and those airdrops ultimately led to, and as well as like the low cost and kind of like high throughput that's available on something like Solana prior to some of the transaction challenges that they've been having, has created like sort of a frenzy where there's a lot of trading, there's a lot of like low cap tokens that are going up really quickly. People are making a lot of money. Wealth effects essentially then trade back into Solana or Sol tokens, and the community and the ecosystem that's stuck around, which like, congratulations, honestly, well deserved. People are making some like life-changing money and able to maybe really have their lives benefit from that. As far as like how meme coins impact the greater Web3 economy, I'll leave that to like other VCs who have written thought pieces on it over the last few weeks. There are plenty of them. Go on crypto Twitter or go to their websites. You don't need to hear me pontificate about it. But what I would say is like, it helps in certain aspects of being able to challenge where the bottlenecks exist in your network and in your like your tech stack, because you're seeing a lot of trades very quickly. You're seeing like hardware get like overrun and RPC nodes get overrun. You're seeing transactions fail and slippage limits needing to be increased. And you're also recognizing like where your users may need a little bit more education. If you have users that are like setting 90% slippage tolerance, I'm not sure if that's a better user experience than like setting it at 5% and maybe just not getting your transaction through. But like users need to have that education. So I think it's like, there are probably some silver linings if you look hard enough. And yeah, I guess that's my answer.
Okay, I now view from our VC friend.
Sorry.
Yeah, I can.
Oh yeah.
Yeah, happy to share. I think we try to remain objective about meme coin. I think on one hand, it's very interesting because I think it helps to unite some of the, in crypto, a lot of people are super young, right? Very degen, so they like to have a bit of fun. And if there's certain kind of popular memes in the culture, right, that helps to unite them and whatnot. But I also feel like we've reached a stage where meme coin becomes highly manipulated as well, because it's not, when you first started, it's a bit more unintentional, right? But whereas now it becomes too intentional, and it's a tool that can be manipulated very easily by people who probably doesn't have the purest of intentions. So I feel like you just need to kind of try to differentiate the good memes versus bad memes, the ones that are trying to take advantage of the market, and but you also have to kind of acknowledge it's a pretty highly risky bet, right? Because sometimes you don't know the team behind it, you don't know the distribution and whatnot. But overall, I think it's an interesting phenomenon, and if you pick the right ones, it could be very, very interesting and also massively profitable.
So I can add 2 quick points on meme coins. First is from an engineering point of view, I think it's a great thing to test out the whole system. And it's always a great thing. It's happening in the past cycles, past years, right? And also, it brings attention to some of the research topics. So for example, on the MEV side, right? On meme coins, there are lots of MEVs being captured on different blockchains. So it's a great, great bet for experiment, right? And second thing, so meme coins and the popularity of meme coins right now always reminds me of like how early we are in the how early the industry is, right? Like we talk about all the like both the startups and the investors talk about all the fancy impact like blockchains have made to the world, but frankly speaking, like all this kind of meme coin thing just reminds you like lots of fancy stuff other than meme coins are just like never realized at this point of time, right? So I guess that's 2 takeaways from this thing.
Yeah, I just want to make a comment regarding meme coin. So I think I'm trying to see what's behind, right, and what this technology, crypto, the financialization empowered. So if you look at the history of humankind, it's actually all about consensus. But forming consensus are actually very hard. Like the fact of China, it was formed through thousands of years of culture, the government, the religion, and everything take a long time. However, it's the development technology that accelerated the forming of consensus, such as the case of internet and social media made the consensus formation super easy or faster, and the consensus is like instead of one-to-many, top-down, start to be bottom-up, many-to-many. Every people can have a KOL, can become a KOL, can start broadcast messages. Similarly, with crypto, it actually makes the financial consensus become much more democratized and much more accelerated. So that's a phenomenon of meme coin, right? For instance, Robinhood accelerated the democratization of trading. A lot of people start to trade. But however, GameStop happened. So there's a choking point where Robinhood can basically delist like the GameStop token stock, and then people cannot trade anymore. But in crypto, such a financial consensus can be formed, and there's no choking point. No one can like delist token or prevent user from trading. So it's like what I view it as more like a capitalism, which is bubble, debubble, bubble again, and then you develop through there, and kind of social Darwinism, but on steroid. Like put it extremely fast, like even like a month or year instead of historical capitalism. The bubble and debubble or blow up the bubble take like 10 years or decades.
Okay. I guess I just wanted to echo Tang, what you mentioned. So from a blockchain infra point of view, meme coins, perhaps like for anyone who's here trading meme coins, beware of, are you the product? Because what we see on chain is first is a good stress test of the blockchain infra, especially around fee markets and mempool design. It also has given rise in this past bull kind of to Telegram bots, which in some sense brought in new flow, potentially from centralized CeFi and somewhere and elsewhere. But it has brought really poor security practice also into the transaction supply chain. But the traders are having a feast, making money off those who are selling off your order flow. So yeah, it's a trade-off, but it's still fun. Researchers love it too, if you look at the PFPs. But anyways.
Great. Okay. And all of you have seen the crypto world, the whole crypto world, both in directly working in the project or investing in lots of worldwide crypto project. And in your point of view, what's the similarities or the difference between the East and the West? Maybe start from Kun.
Sure. So the question is more like the project. What's the difference between East and West? So what I see is, I think Western or project in America tend to be more like infra focused. I think it's because it's like some of the most reputable institutions doing research are located in like America and the West. So that's why the researchers can actually commercialize and do a startup with the support of VCs, those kind of infra projects. And the East tend to be more application driven, just because I think more specifically Chinese are really good at execution. You can say the miners and exchanges are all Chinese, and the major apps are Chinese as well, or predominantly Asians, where they're very good at execution, fast iteration, and also there's a massive user base in Asia as well. And what that would mean is, where I think still at the stage where we're working on the infra is still premature or not mature enough. So that's why a lot of applications tend to be a little bit like hype-driven. So you don't see application able to live multiple cycle. Application can really go to a lot, like very much hyped. A lot of people use it, but usually within the cycle. The next cycle, for instance, NFT is kind of turning cold, and there's some new narrative. That's the case for applications. So that kind of nature or characteristic of application kind of shape the mentality of Asian VC and project. They tend to be much more sensitive to time and trying to time the market and trying to maximize the time within one cycle versus the Western project, Western VC, because their project or infra can live through multiple cycles. They're much less time sensitive and much more focused on the long term of the infra project.
Yeah, happy to chip in. So we're based in Singapore, but we have people in Silicon Valley as well. So I think we have a pretty good view of East and West type of projects. I would say the whole industry is still very early, right? Everyone's still building infrastructure. So in terms of the type of projects we see, I think across the whole stack, like what Kun was saying, Western projects tends to build more lower stack, more infrastructure, whereas East projects tends to build more application, right? But the whole industry haven't reached the point where we have massive breakout of consumer apps. So to a certain extent, I think the Eastern projects are somewhat disadvantaged, right? But also, I think they could be the lifeline of energy that comes in and really propel the market forwards in terms of mass adoption. So I think that's the difference there. Secondly is the market infrastructure is different for the West and East. So in the West, I think you have a lot of deep tech, a lot of academic research, right, that are super helpful, that contributes to the progress of blockchain industry. But in the East, you have the exchanges, right? You have the retails, you have the gamers and whatnot. So it really helps with mass adoption and also kind of providing liquidity to the projects. So I think the best projects we've seen that we're most proud of are probably a combination of the advantages of those two.
So I think perhaps I can comment from both from the investment side, having dealt with both investors from both sides, as well as like from a startup perspective. I think that the East feels a bit bipolar in the sense of, on the one hand, like from both investors and entrepreneur profile, you have absolutely, I guess, 佛系, whatever that is, like in English, like very chill Buddha-like investment philosophy, just, park your money, some long-term professor coin, and then just, check back at it, that kind of VCs. And then you have like extremely like short-term myopic, trader style, capital that makes the market quite frothy. And similarly, you see like, fellow startup, like founders, they're kind of split between, I think in general, one trend is opportunistic. Like I think one is like the one thing in common is wherever they come from, they're opportunistic. But in terms of like the ones who made it, not only do they focus on application, but they're very, very good at product management in the sense of like, I would say 10x that of any, like, some of the Asian wallets, the user experience is 10x that of any of the top PMs. So like, this is definitely an advantage that I think is underrated. Yeah, so I think everything else others have said. Oh, maybe one other comment that's kind of interesting is that I think that on the east side, the investors tend to lag behind in terms of information, from Silicon Valley, the gossip chain there. The angels and the rumor mill in Silicon Valley, they start probably at very early stage, at hackathon stage, in most ecosystem, and they scout out and they follow the winners of interesting hackathon projects that oftentimes pan out in bear market to interesting startup in bull market. But you rarely see Asian faces there. Start to have some. So they just a data point, when we raised our Series A, we did a sealed bid auction with venture capital. And so, like, essentially, we got 11 bids from the US. We got 1 bid from Asia, because we actually did not tell anyone we're raising. So it just, people kind of figured out. So you can see the clustering. We got like probably 5 on the East Coast, 6 on the West Coast in the US in terms of like venture capital who bid it for our Series A. But, and also pricing differential is that the the Asia bid is 2x that of the valuation of any of the Western bid. And so it was a huge price differential. They clearly were not looped in terms of the gossip mill. So it's very interesting to see like a experiment like in prod from a fundraising experience.
So I guess I can talk more about, because all the panelists have already talked about the difference between the east and the west side, right? I guess what I'm thinking is, in the long run, I think the differences there will be fewer differences in the long run. And ultimately, in the long run, what's important is how, from a startup point of view, how do you serve your users, whether it's end users or enterprises or developers, right? So I think I think after the industry or market has been developed for years, we will shift our focus to look at more like looking at those users. Where are all those users, right? If you just talk about the U.S. and the China side, I guess it's challenging because both countries have pretty developed financial systems, right? From a practical point of view, I think for most of the end users, it doesn't bring great value to them because their previous system is already quite developed. What may bring more benefit or value is regions or jurisdictions beyond the two big part, right? Out there, the financial system is underdeveloped, and there are many more like underdeveloped people. So I guess ultimately, no matter it's a team from the west or east side, you need to be able to have a global view and to be able to capture those users from those regions. And if you bring, I guess from a user point of view, they don't really know, because I have some friends in other regions, and when I talk about, okay, this product is developed by a Chinese team, they didn't even know, they couldn't tell, and all they care about is whether it brings value to them. So I guess hopefully at that stage, I guess people think less about whether it's a east or west side product or team, and it's more focused on okay, how many users are you covering, and what values do you bring, and how many value are you capturing? And I think I hope that will become a more important topic at some point. Yeah.
I'll go very quickly. We have LPs that are in the East and we have LPs that are in the West. We love them both. We have portfolio companies that are in the East and we have portfolio companies that come from the West. It's always easier to invest in someone when you can meet them in person, and it's certainly easier when one of us is not on the phone or on the webcam at 11 o'clock at night, and one is at 11 o'clock in the morning. It's hard, but like I think both the East needs the West and the West needs the East, and we are benefiting from each other and being able to work together and come to things like this conference here, which is like my second time here, as well as like conferences where you have like DevCon, which like very much promotes being in a different area of the world like every other year, and being able to travel around the world is like absolutely a perk of the job, and getting to meet people in like different areas of the world and in different like cities and countries. So I guess what I would say is like we have users and we have applications that are specific to like the East, where you have these super apps, and that's for like Web 2 apps. The West has like a much more like kind of restriction on having some sort of super app that's going to be like monopolistic on like the user experience. And so as a result of that, like the products that come out of the East and the products that come out of the West sometimes are very different. But I think ultimately they both like tend to inform like the way that things will develop, and I think we'll see Web3 applications look much more like super apps to the extent that they can. But then we have things like modularity that try to kind of break that up. So yeah, I think it's like pretty good mix right now, and I think we'll start to see more like there will be more application developers in the West, and we're seeing a lot more really strong teams come out of the East that are building on the infrastructure side now, like much more so than like 2 years ago.
Great. Okay, this question is to Tina, and we all know that Flashbots as a game changer started from research, and for also there are lots of researchers maybe who will turning their research into the next big thing in the crypto. And what's your advice for them? And maybe got any wisdom or lesson learned during the last several years?
Yeah, so I think it's kind of tricky. Being a researcher, probably my greatest advice or lesson is that find a good operator. Like, find within your classmates, people someone who actually has done and failed many startups in the past, but you still trust them and they're good people. Because I think I have not seen any, solo researcher being able to make it. There's just so many, startup traps that you need to get through. And in fact, even some of the professors, very esteemed researchers, I think they also struggle with this in terms of finding, you see the ones, the wave of professor coins that didn't pan out, oftentimes it's co-founder issue. So yeah, so that was that's probably the most useful lesson. That said, in terms of from Flashbots' perspective, our work was rooted in research, but in fact, how we came together was more of a product opportunity. That during the DeFi summer, we saw that PGA bots were gaming the gas price to sky high, and chain congestion was huge. So actually, we didn't think about the MEV paper, Flashbots 2.0 up first, which defined MEV, but rather, it was a few of us came to the same idea that we need a fast lane for transactions. So the question is, we were debating, okay, what kind of architecture do we actually want to go with? And then within my network, a legendary researcher and hacker, Phil Diane, reached out to me saying, hey, I got a design. I heard you guys are working on this problem. I got a treasure map. Do you want to take a look? So that was actually where the product idea and a group of people who are known in the space meets the researcher behind the scene. And the research was very simple and elegant, so that won over basically all of the developers, the builders in the room who wants to, vie for, a design. So I think, I'm not sure how replicable it is, but I think there is one thing to point to which some of our, research network friends here may be able to comment on, which is IC3. So, like, if you are not, familiar with IC3, it's actually this intercollegiate network of, like, essentially between academia and the industry. And a lot of the, I would say, crypto researchers from academia comes from this network. And so many founding members of Flashbots, actually we came to know each other through their work in there from IC3. And so, but then one thing just to point to, this is that there is a difference. Basically, some of the top projects, they all have IC3 members in there. But what makes a difference, there's two camps. There's the professor camp, and then there's the dropout camp. Flashbots is in the dropout camp. And in fact, I believe dropouts are going to eat the world. So I advise you all to consider dropping out.
Okay, great. Time's limit. So let's move to the third part, the end part. Just give a few words or one sentence to our audience all the how to collaborate the VC, academic, and project in the Asia area. Yeah.
Okay, I guess really quick from my side. So Audrey, so please continue this kind of event. I think it's great venue, especially on the Asia side, for everybody to collaborate on the topic, and it's awesome. Yeah.
Sorry, is the question about how to facilitate East and West collaboration? Academic and industry. Okay. I think crypto is actually one of the field where academic research really benefits, because with the concept you can easily raise money if the market condition is good, right? And also you can look for operators all over the world, so you're not restricted by geography. And I think university accelerators or blockchain clubs are doing a great job, like what Kun is doing in Stanford, right? To kind of bring the research pieces, the professors, the aspiring kind of students more in touch with the industry operators, help them with early funding, help them with co-founders and whatnot. And for us as an early stage VC, we're also trying to be a lot more plugged into the lead researchers and academic papers, producers out there. So that's why we're a close partner for Kun's Stanford Blockchain Accelerator. We're sponsoring Harvard conferences and whatnot. So I think, if you're doing something interesting in crypto, if your students, like Tina was saying, if you plan to drop out, you have a lot of people you can go to in the industry to get help.
Yeah, sure. I'm sitting in between the dropouts in Stanford University. I feel very conflicted right now. I think one of the things that's probably most underappreciated is like building community. It's one of the areas that Flashbots and Tina, you have done a phenomenal job with, is like building a community of researchers, also investors, and just like people to get more interested in MEV, the problem, and how to fix it, or try to make it better and more equitable and fair. The research events that Tina hosts in countries and cities all over the world are some of the best attended, well attended, and like highest alpha like conversations that you can have with like incredibly intelligent and thoughtful and like experienced searchers and builders and proposers and researchers and investors. And so I think like you can have those communities both in person, which is like incredibly valuable because it's like so rare because people are all over the world, but also those communities exist like online. They exist in the ETH research forums. They exist on the MEV letter that Flashbots puts out every week or two, probably. And then also like on Twitter and probably Farcaster and a bunch of other places as well. So there's like places that you can find communities, you can find like education, and you can find people to like work together with. And building communities is incredibly important and relatively underrated.
Sure. Yeah. So I think this kind of conference is definitely a great opportunity for the collaboration between industry and academia. And also another interesting thing I think in the academic world, actually, I mean, language and culture still matters. Like that's why there's difference between East and West, but seems to matter or actually matters much less because it's much more merit-based. People speak code, speak math, speak cryptography. So it's much easier to collaborate and find a common ground because of the math, because of the cryptography, less so because you don't speak English or you speak poor English or you don't understand American culture, etc. So I feel definitely there's way more collaboration opportunity between East and West just because it's math and cryptography that everyone speaks deep in the academia.
I guess I'll just comment last in the sense of I think, practically speaking, turning research into product is an extremely hard problem that for decades no one has fully mastered it. But I think one thing I learned in the past few years is that research is about open-end asking the right question and finding surprises. But it takes, whether you call it weavers, what we call human water coolers at Flashbots, or like, basically people who have an eye for the practical problem or that actually needs to be solved, to make use and inform the researchers to actually loop the two ends in, because productization is about consolidation of knowledge, not about finding surprises. And you need a different type of people. And the second thing is we make it, we learned from the best organizations in the world, as well as from Ethereum, where you can see that any R&D organization had this split between research and development, where researchers' mind share must be protected and nurtured. And that sometimes entails defending them for whatever the hell they want to do, as long as you invest in the right person. And the last thing is, I think, for a call to action for VCs is, I think how I could find the problem of MEV came from curiosity of curating knowledge in a particular area that I'm interested in. And that means systematically dissecting what's actually, what's the known unknowns, and then proactively seek out who may have the answers. And I think this is something VCs can do the best in.
Great, thumbs up. So thanks for all of our honorable panelists, and hope all of our audience learned something from this panel. Great, thank you so much.